Markets around the world are heading for their best month in over 3 years, fueled mostly by expectations of a Fed rate cut cycle. But what happens before, during, and after a rate cut expectation? Today we talk about the history going back over 70 years of what has happened during rate cut cycle periods. Also, why does that mean you need to be watching this end of 2023 and the start of 2024 so closely? Crypto eyes 40,000 as Thanksgiving brings the cheer for the coin. Could we hit 46 by the year end? Today we talk about that. And more importantly, what's going on with the actual technicals in this market right now? Sentiment just drove to a 3-week high when it comes to expectations. And of course, we've had 4 weeks of now upward cycle on the S&P 500. Can this dulling market actually be stopped? And more importantly, what dark pool transactions do we see underneath? The NASDAQ starting to show rotation. The VIX is heading to the lowest point in over 3 years. And the US dollar could be the most important hedge to be watching right now for both bulls and bears. Join us in our special weekend edition of Stocks, Commodities, and Cryptos Around the World. Well, welcome back everyone to the special weekend edition of the markets around the world, including the macro, the lead indicators, and the hottest charts. If you like anything to do with markets, remember to subscribe and smash that like button. I'm sure you're going to find a lot of value in today's video. There's plenty to discuss. It seems to be a buy the rumor, sell the fact on Nvidia at the moment, and this is kind of what we expected. Nvidia often does this around earnings periods, and especially when it has a nice little breakout that everyone's been discussing. The Friday, which was a shorter day in trade, did show some rotation out of technology, but it was actually notably green across other sectors of the market. And this brings us to the Fear and Greed Index and some of the rotations that we're seeing going on underneath the hood, some of which have been defensive. Greed starting to tick up there into the extreme greed cycling period. This is something we will be looking at and we'll be posting a lot on our X account, so make sure to follow over there. Just a quick reminder as well, we do have our special once a year Black Friday sale on. All you need to do if you're interested in some of the courses and things that we provide, jump on over to the links in the description down below, click on the Black Friday sale, and of course, we hope to see you in our Market Masters Club and some of our courses very soon. Also, just a reminder, we're releasing our free first ever VIP weekly newsletter this weekend. So make sure to sign up for that as well, as it's a pretty damn good thing, and I think you'll enjoy the first edition. So what's going on with the sentiment reports? I posted over on our X account that we have now seen 3 weeks of incredible bullish pressure. This is coming off one of the biggest bear readings we saw in over a year. But notice what happened in this particular week. We dropped off to only 23.6% of people being bears. This is usually a sign that we need to be very worried about markets. And even though the market's currently dull, we need to be potentially looking for turning points. I also posted the last 5 days of rotation going on, and you'll notice that it is not semiconductors and technology leading the charge. In fact, semis have now been down over the last 5 days. Same with solar, same with clean energy, same even with regional banks and technology. These are the worst performing sectors over 5 days. Look at the best ones. All the things to do with inflation and also just generally defensive. Materials, our favorite sector at the moment, very nice. Gold, one of our other favorite sectors at the moment, very nice. And then of course we've got those defensives, the traditional kind of healthcare staples and a few of those sitting in the middle. So let's go over to what's actually occurring and why this market continues to push higher at this stage. In my opinion, a lot of it has to do with everybody trying to have a go at a short. And you can see here that there's been some big shifts over the last week. The bearish positions on the SPY continue to get injected, and this is going up now to 65%. The Dow is sitting at 75% bearish, and the DAX is now at an incredible 82% bearish. When you see the DAX on the chart later on today's video, you will be like, wow, why would anyone go bearish that? But look, the facts are everybody's trying to go against the DAX. Most notably, though, was actually the FTSE. It was hugely bullish and now is reducing bullish position and increasing into the bearish position, actually marking a point where the FTSE might play catch up, which it hasn't actually been doing for so long now in the markets. Bull-bear spread moved up to 20%, which is something that we always do look at. And this is again getting closer to those extreme peaks. Notice the last time we were in these periods was actually August And of course, we did actually see sell off from that point. Anywhere when you get up above 20 to 30, and especially if we get to the 30 in the next week, this is going to be a huge deal. So bull bear spread, we have to be paying attention to it and starting to go in the favor of somebody that's thinking a little bit differently. Possibly a bear might be right very soon in markets. Thanksgiving, Santa Claus rallies. This is where the bulls will rejoice. The stats are certainly in your favor when it comes to what happens for the rest of the year. Thanksgiving into the Santa Claus rally, which is the Tuesday before Thanksgiving, so this week just happening at the moment, all the way to the second day of the new year, does tend to be bullish overall. And of course, the stats are pretty much in your favor. 79% of the time since the 1950s, you've seen that particular run come through. Here's how it looks in terms of a chart, in terms of 1950 to 2022 seasonality, and it's usually a bit of a vertical run. Now, at the moment, we already are in one of those vertical runs. We're in basically a market that looks like it's dull and very hard to short. This is one of the reasons I believe we're in that. We've mentioned this now for many, many weeks. When we've seen 7, 8, and 9 day kind of bull runs with no bears, we go into what we call a dull market. Now, dull markets are slow, they're a melt up, they're methodical, and they don't realistically make lower lows. So we'll be looking at that to see whether we do get a lower low, but it actually runs for 60 days. Now, funnily enough, from the time of that particular read, we might be looking at that basically taking us into 2024. Now, for 2024, things start to change a little bit. A lot of people are going to be calling recession during 2024. And they may not be wrong. Since the 1950s to 2022, we've seen a lot of recessions. In general, we have a couple of things that tend to happen. Usually they run between like 120 and 180 unless it's a serious recession, e.g. 2008, 73, etc. And we do tend to see a sell-off that could be in the yards of anywhere between 10 and 20%. Now, why do we say a recession could be coming? Well, remember this, the Federal Reserve doesn't rate cut out of the goodness of their heart. This is another read here, negative 23, 195. They're only going to do it because something is broken or something is slowing down in the system. So the history is not on the side of the Federal Reserve making the right decision and getting it done. Now, of course, everyone thinks soft landing, and don't get me wrong, 3 soft landings out of 14 is certainly a stat, but it's not necessarily the stat that is most likely. 11 times we've seen recession get called, and therefore on average we've gotten that negative 20%. Usually it sits around 10, and do remember that signs of a recession are already starting to come, and the signs of a Fed pivot are already coming, which is usually a sign for many people to buy initially and then to sell the actual fact. Now, the reason I wanted to say sell the fact is because what we've seen over Nvidia has been everyone rallying it into the earnings. The earnings were great, don't get me wrong. And then all of a sudden the stock market starts to turn around and look a little bit weak on that particular stock. That does happen, and it tends to happen a lot to us, the retail traders, when we're talking about retail trader stocks. Now, I'm not saying Nvidia is going to the end of the world or anything, but it is interesting to see the weakness coming off that particular event, and there could be more on the horizon for it. So why do we look at yields? Because they tell us that things are changing. We've already seen a first time frame change of trend on yields, so it does start to make us think, well, a rate cut is more than likely. Keep this stat in mind. During December, we will see the Federal Reserve make a decision on rates. If they choose not to raise rates again, that will mark 5. We've never seen in history ever a point where they've gone past 5. Now, anything can be changed, but we've never seen that. Past 5 has never happened without a pivot later on and therefore a cut. And it makes sense because the rest of the world is already cutting. Other central banks around the world have increased their cuts over the last 2 months so that it is higher than the hikes. And we've also seen central bank loosening across the world, which is in part helping the markets go up, at least in my opinion at this stage. What do you think though? Let us know in the comments down below. Let's move over to some other things going on right now. Commodities to equity ratio. This is a chart I'm going to bring up a few times and we'll discuss it in the future. If we are in a commodities boom, and let's say we have begun this cycle. Now, I'm not saying it gets to these levels. We don't know that. But basically, in a ratio form, commodities are actually still quite cheap. So could they be improving over the next couple of years? Well, on average, we get a +7 usually in commodity cycles. And we could argue we're a +2 or +3 at this stage in the new cycle period. So it is interesting. And of course, I think it's something that we'll be watching, and it's worthwhile watching on the charts moving forward. So if we do get a Fed pivot, if the Fed do a rate cut and everything else happens, what does that tend to do in the markets? Well, we've seen IWM, the Russell 2000, mid caps as well. They're running at really bad valuations. I'll share over on our X account, follow in the description down below. That's Twitter for anyone that doesn't know. I'll be sharing a bit of forward projection in terms of forward PE of different caps. So you can see the 2K versus the mids versus the large megas. And I think it'll come at no surprise that the mids and the small caps are super far behind. Now, if we do get a Fed rate cut cycle, what that could actually do is mean that Russell will actually outperform the S&P in the majors. And what we may actually see is a turnaround. So you can see here during other rate cut cycles, or at least loosening, we've seen the US 2000 do a little bit better. That's something that is interesting once again. In terms of this chart, where we are at this stage, we're here about in terms of the Russell 2000. We usually see a sideways action, sometimes weakness at the back end of November, which you can see here. We start off December okay, then we see this dump or a little bit of a crash or a flash sell that happens into kind of the middle of December, and then we often see rallies that come through into the start of the new year and possibly even through January. Now, that's seeming like the most likely course of action for the markets at this stage as we continue to dull or move up with a melt up. But the Russell 2000 hasn't quite really gone ballistic yet. Will it do so? It's certainly in the market sector that a lot of people are looking at. I'm not discounting this particular chart either. Remember, we're on +7 at the moment in terms of expiration and seeing weakness afterwards. If we were going to say where we are at the chart at the moment, we're kind of here. So, of course, this is still possible. We've seen other times where we've rallied up and then sold off. We're looking for a little bit of weakness after expiration. So certainly something that we are checking out. Gold, yep, we bring this chart up all the time. Gold continues to break out. I've noticed a lot of people have been super bearish on gold since about 1850. Those people are unfortunately getting smashed at this stage. But we're hitting that 2000 barrier. So this is an area where if gold's going to break to an all-time high, if it gets a little bit higher, which we'll look at on the chart soon, it could be looking like it's going to do so. And of course, that's counter to what a lot of people have been discussing for a while. Gold does tend to like rate cut cycles, though, of course, if we go into a super recession, gold is not going to be safe. It is not a recession killer. It's not a recession stopper. Do remember that. Let's go over to unusual trade activity. Firstly, on the day just before the earnings result of Nvidia, a large transaction comes out. I wonder who that could be. A seller comes in to sell the fact just before, and VIX shorters have started to place large trades. So this is another VIX position. I think we've seen +3 large VIX positions now over the last couple of trade sessions. So someone's starting to go, well, I'm starting to think there's some volatility that could come back into the market, maybe just for the next 10 to 15 days around that kind of seasonally weak period that happens maybe around the 8th to the 15th of December. More on that coming up in an upcoming show, so subscribe for that. Let's move over to the Direxon S&P Bull 3X shares. We're seeing a lot of big transactions at these highs as the market's going dull. I would say that is probably profit taking to a degree. And of course, another VIX position here, a huge short position. And you can see it's been a long time since anyone's done this. Now, this is, of course, the opposite VIX. So you've got to consider it as if someone's going on this, they're thinking that the VIX is going to spike. That's what they're probably doing in this circumstance. Let's move over to the large options that have been traded over the Friday. And look, you can't expect it to be a good day. Just to show you how low the volume's going to be on the Friday, Black Friday, is 18.5 versus a normal of 40. 56% calls, 44% puts. So we generally do see that. And yeah, retail traders made up a pretty big portion, 28% of the overall trade. Let's jump into the charts now. So first up, have we seen weakness in one of our leads? Not really. This is my favorite little bond indicator to show us whether we're strong or not. At the stage, we are still relatively strong in markets. There's no lead from this particular indicator. When we have a look at high yield junk bonds, so this is basically junks, we can see that we're back at a resistance or a supply level. And this could be where junks start to struggle. They've had a great run up, and that's, of course, allowed the market to go up. And do be aware that junks improving past 76 is going to be a fairly bullish sign for markets. In terms of equal weighted markets, we saw rotation of breadth go around. Equal weight starting to outperform the S&P and outperform the NASDAQ. And this is in line with what we've been talking about. mid caps in particular starting to improve at a faster rate, something that I think is going to potentially continue to occur if we keep seeing this rally. Let's move over to treasuries. They were down as we saw a bit of a spike in yields. Specifically, the US 10-year yield was up 1.36%. But if we have a look at the weekly, it still had that transaction that was lower. So realistically, we are still in now a short-term downtrend on something like the US 10-year. When we move over to put call ratio, we saw puts rising up once again across everything to do with the market. So this is a little bit of a worry if you're trying to short the market right now. Still quite a lot of puts in the system. And you can see here that our effective yield rate hasn't told us to be scared yet in these markets. Same with the Dow Jones Transportation Average. No scaredy cats yet in this particular market. Usually a bit of a pre-signal. And same with home builders. No signs of weakness. So really, it's just that kind of idea at this stage that we have some kind of defensive move in the markets, but we don't have a trigger yet. What about central banks? These guys, what are they doing? They're sneaky, and I'm telling you, they are just absolutely out of control, aren't they? Back to loosening. That's what they're doing. Let's inject into the market. It's all good, all green, all good, guys. So I still think something's broken. We just don't know what it is yet. And as I said, post in your comments down below. I'm reading them to see if anyone has some good theories on what they think is broken. Maybe we'll put it in the daily show. But at this stage, yeah, both the green squiggly line and the purple squiggly line are going up, which of course is decent for the bulls, at least in the short term. Copper improving, that's in line with what we think at this stage. Copper and iron ore doing their thing, which has been pretty nice. And the US dollar weakening off. So the bears failed to capitalize on this incredible zone for the dollar so far. The dollar rallied and the dollar came to the supply and the dollar sold off. For people that were trading the currencies the last couple of days, the euro in particular was pretty sweet. I thought that had a pretty good trade on it. And really, currencies might have been one of the better trades of the week, frankly. There were some really nice trades coming in on it. A very important point for the dollar, though, we'll continue to watch it. And as I said, there has been some strong trade. We've talked about the Oz dollar so the odd versus the US dollar being pretty strong. And then, of course, we've also seen, some nice strength here in things such as the euro recently with huge pull-ups. So, yeah, some stuff going on there in the currencies. Speaking of currencies, let's go over to the oldest currency, which is gold. And gold ended up closing its week at 2001 on the spot. That's a pretty strong close. It's not higher than the others. We need to now get past 2009. I already think it started to trigger some buys, which we saw as we kind of got through here. Pullbacks being met by bull demand. I'm looking towards gold, starting to pressure in that 2050 kind of line. So can we get up $50 over the next week? It'd be interesting. Gold running into some pretty good times ahead, but of course needs to clear 2009 to really get that liquidity churning back in. What about your oil? Well, oil is still in a downward trend and it failed to get through 79 or basically $80 a barrel. It's just hovering around. We have seen some spikes though. I'm actually a bit confused by the oil chart other than to say it's still in the downward trend. So yeah, I'm not really seeing too much edge here. I did like most traded level number 2, which of course we've been talking about, but I don't see the bulls really regaining strength in this market until they get it past 80 a barrel. And the weekly close is just another red close. In fact, how many red closes is this? 1, 2, 3, 4, 5 red closes. So it could be just in consolidation for now when it comes to oil. Tesla, a weaker rejection here. So we have rejection wick and rejection wick coming off those highs. Not really great for the bulls. I mean, I think Tesla's a little bit harder to trade than it was the other day. We got the gap fill that we wanted, so that was pretty sweet. We haven't been able to break above this zone here, which is going to be a break close above 240.250 is going to be pretty key. And then, of course, a break close below 230 is going to expose those bears into the 222s and 220 zone. For now, though, trapped in within a range, not too much to get from Tesla. Nvidia, though, does have some signs of weakness. It broke this previous low. It did it after, of course, earnings results, which, of course, were green and all good. And let's have a look, actually. Let me just quickly see whether we've had any updates here on upgrades for for Nvidia recently. So, yeah, mostly it's just concerns over everything that's going on overseas in the geopolitical realm. However, it did break to the new low, so pullbacks could be met by bear demand. I've already seen the first pullback getting met by bear demand, which is what you expect. So, look, the reason why Nvidia could continue to sell off here is it just has a history of doing this when it gets range bound. A notable range bound period was after its huge run back in 2020. And you can see that it loved having a new high, rallying down, new high, rallying down, getting into the middle of the range, and then going more bullish. Investors probably don't need to be super concerned, but as a trader, the first signs you don't want to see are usually these little sell-offs that occur at the peaks after making a new high, after sentiment was so bullish on it. And then, of course, you start to see this little bit of weakness coming in. We could go back down to this level. More on Nvidia coming soon. We'll find out. Hard to short that market, though. I usually wouldn't short semis personally. It's the best sector in the market, so why would you go to the negative on it? But that's up to you. Let's move over here to the Aussie 200. So we mentioned the FTSE before. The Aussie 200 trades in a similar way. It's been a little bit slow in recent days. It's kind of sitting around its support. But I want to go to the UK 100 for a little special here. Now, the reason I want to say this is because it was a heavily bought market, and it did nothing. Then now it's reducing in its buy position and it started to move out. Now, the reason it could is it's got energy, it's got materials, it's got banks. So really, it's got two sectors that are starting to improve a little bit. Energy's improved recently off its lows, and materials is obviously running a little bit. So UK 100, interesting to see that shift. Now, let's have a look at the German DAX. This just shows you shouldn't necessarily go with what all retail traders are doing. Since about here, on average, 70% of retail traders have been short this market and getting slaughtered. Now, is this an important level? Of course, yes it is. It's pretty easy to see. It's a huge supply. But notice the market went to a new high. And at that point, shorts went everywhere. I would expect it to wipe these highs. Then maybe it could find weakness. But the thing is that so many people are getting destroyed in this trade right now. It is starting to go so heavy towards the short, though. When you get into those 80% short levels, often you are coming into a kind of a turn point, and we might even see a wyckoff on the smaller timeframes in terms of distribution. We'll be watching the DAX quite closely this week. US 2000, this has been our weakest market. If you were going to have a go at the short side, this was the one to go with. However, it sold off a little bit from 1800. 1800, obviously the trigger. And at this stage, it's just underneath this level, and of course, still underneath this level. It's pretty dull. It's pretty much just sitting there doing nothing. You could draw trend lines through the bottom end if you wanted to, and then say if it gets through that and that low, that's going to be a negative sign. That's probably fair at this stage. But US 2K is still a chart to watch, but nothing there for us just yet. Let's move over to the Qs, floating around in the highs. They've rejected. I like to look at the NASDAQ itself. 2 alerts that I'm setting this week in terms of bears possibly starting to win and possibly starting to get some action. 15,855, which is just under this low. And then I've got the more important one, which is 15,727. So at this stage, it's dull, making a series of higher highs and higher lows as it's grinding out higher. Underneath these lows, that could be a bit of a deal changer. And of course, we'll be looking for it. But the S&P 500 always remains the king or queen in terms of when you're looking at these markets. Let's go over to what's going on in the S&P. It's moving towards these 4,600 levels. Still dull, still moving up. Let's go to the futures. So the futures shows that if we get to something like a 45.86, we'll be kind of topping off with that previous high. Now, that's going to be an important level. So something to watch if we keep driving a little bit higher here as we see rotation. Let's say we go defensive. We keep seeing defensive markets rotate through. We hit here. At the same time, we're seeing tech drop off, and therefore it's being driven by other sectors of the market. This is still where you expect bears to at least get a little win in the markets. But the problem's going to be, when can you tell that there's actually a short on these markets at all? And at this perspective, it's really going to be hard because you continue to make a series of higher highs, higher lows. Now, what does this remind you of? It kind of reminds me of Bitcoin recently, which just keeps pushing higher, but it just keeps kind of like going like this, like a dull version. It's just not shorting off yet. So unfortunately for the bears out there, nothing yet. Some levels that you could set alerts for. We'll do it right now. Underneath this low, and of course our one from the last couple of weeks, which is 44.85, the most important level at this stage for bulls and bears. So it's still bullish. There's no real turn there on these markets. And if we go over to Bitcoin, it just pushed a new high above 38K. So can it get to 39.5? It seems like basically 39.5 still on the cards and 46K still on the cards. Nothing really has changed there. Another one we're going to be looking at is Ethereum, which is pushing into these highs. Now, just rejected 2150. So if we go to the weekly here, you'll notice this is a big zone. Now, notice this. We have wick rejection. We have a huge doji. And at this stage, it's the Thanksgiving weekend, so we'll find out whether everybody can convince everybody else to buy it. That actually is why a lot of the times we do run over these periods into December. It's the festive time, and we do see people talk to each other. There's that funny meme that I usually put in the videos about the Mr. Investor. But overall here, yeah, we've got Bitcoin basically riding into that 21.5 level. So, sorry, Ethereum riding into that level. And this is going to be an important breakout close. So we'll set an alert above that if it happens, because at that point, everyone's going to get hyperactive on the cryptoverse. All right, so what else do we need to be watching this week? Well, of course, there have been quite a few little bits of news. We've got some other central banks around the world having a chat, but we're always interested in the US. So let's go down here. We've got OPEC just driving us insane. That's happening on Thursday, so that'll be big on oil. Then we've got core PCE price index for 8:30 a.m. New York time on Thursday. And then on Friday, we have our good friend Papa Jerome coming out at 11 a.m. New York time. And we also have ISM manufacturing PMI. So in many ways, this week will be allowed to be the markets week. We'll be allowed to see how the market wants to technically trade. And at this stage, it is still a melt up until proven otherwise. And that's just the way it kind of is. Mid caps looking like they're still the best in the market, and we'll see whether they can continue to outperform. RSP is a good read on those. Just to remind everybody, Black Friday sale this weekend only. If you're interested, links in the description down below. Love to see you in those. Otherwise, free VIP weekly newsletter. Totally free. Couple more spots before we launch it this coming week. I really appreciate everybody. I hope you had a great time with your family if you do Thanksgiving, and hopefully you had a delicious meal. And hopefully that turkey also wasn't too expensive. I heard it was up 32% on the last 2 years in terms of inflation. So those turkeys aren't cheap, guys. All right. Thank you very much. Bye for now. Subscribe, smash the alerts. See you later.